in the previous year, I had goods worth of 2 lakhs. I purchased goods worth of 2 lakhs, of which I sold goods worth of 1,50,000 for 1,80,000. I incurred a profit of how much? 30,000. 50,000 was ignored. Why was it ignored? Because that is the amount of goods which I haven't sold till date. So this will not be counted as an expense for 2023 because that was the expense. I know the cash has been spent, the money was gone out, but then also it will not be treated as an expense because this expense relates to the next year. Why? Because these goods will be sold in the next accounting year. So it will be treated as an expense for the next accounting year. I think this is very much clear to you. Now, hello guys, I hope you are all clear with all the concepts which we have done in the previous classes. Now today we will be doing in this video the next concept, that is the matching concept. Now what is the meaning of matching concept? Obviously, when we wear the clothes, always we check for the matching concept. That is, when we wear a light colored t-shirt, we will wear the darker pants or the jeans. So same goes with the business as well. Now, for example, let's check the meaning first. So obviously every business is started to earn the profits. Now what is the meaning of profit? Profit is basically all the expenses when deducted from all the incomes, we get the profit. For example, if I have purchased a pen of rupees 10 and I'm selling the same pen for rupees 12. So this is the purchase price at which I have purchased the pen. This is the selling price at which I have sold this pen. So 12 minus 10 is the amount of profit which I have earned. Is that clear? This is the main amount. This is the actual amount of profit which I have earned by selling this pen for rupees 12. Now, for example, in the year 2020-23, there are 2 years. Suppose one is 2023 and the other one is 2024. Okay, now, since we know what is the meaning of profit and how do we calculate it, now let's see the practical concept. In 2023, what did we do is we have purchased goods for selling purposes for rupees, say 2 lakhs. We have purchased goods worth of rupees how much? In 2023, 2 lakhs. And in the same very year, what did we do is we sold out of this 2 lakhs, we sold goods costing 1,50,000 and 50,000 worth of goods are still remaining with us. Just look at the example very much keenly, that we purchased goods worth of rupees 2 lakhs in the year 2023. Of that 2 lakhs, we sold goods worth of rupees 1,50,000 in the same very particular year. Next, we have still with us the goods worth of 50,000 which we have not sold. So the matching concept simply says the amount of profit will be calculated as per the expenses and incomes incurred in that year. Now what does that mean? This simply means, suppose I sold goods worth of rupees 1,50,000 for say rupees 1,80,000. So what's happening is I have received rupees 1,80,000 as my income. I have received 1,80,000 as my income, for which I had spent rupees 2 lakhs. Obviously, I have received how much? 1,80,000 after selling the goods in the full year, for which I had spent 2 lakhs on purchasing these goods. So after deducting 2 lakhs from this 1,80,000, I have incurred a loss of 20,000. Are you getting my point? I repeat once again. I purchased goods worth of rupees 2 lakhs. I sold only a part of that goods of rupees 1,50,000 for rupees 1,80,000. So what is the actual amount I have received? That is 1,80,000. And what is the actual amount I had spent on purchasing that asset? That is 2 lakhs. Okay. So I have incurred a loss of how much? 20,000. So this is the wrong calculation. This is what is told by matching concept. Matching concept simply says the profit will be calculated by the income and expense of that very particular period. Now what does that mean? That simply means, since I have sold the goods for 1,80,000, so this is my income, this is my revenue. But did I sell all the goods All the full goods, did I sell all the goods to the customers? No. I have only sold the goods which costed me rupees 1,50,000. So the actual expense for that period is not 2 lakhs, is not 2 lakhs, but only 1,50,000. Okay, so in that, after deducting 1,80,000, 1,50,000 from 1,80,000, I will get a profit of how much? 30,000. So this is what the matching concept says. That it says the expenses incurred to earn income should relate to same period. The both of the expenses should relate to same period. I know this 2 lakhs is also for the same period, but then also, did we sell all the goods or not? Obviously, we haven't sold all the goods. We have sold only the goods costing 1,50,000. These goods which are remaining will be sold in the next year. So that 50,000 will be, will be recorded as an expense for the next year, because next year I will be selling these goods to the customers, and I will earning the income out of this in the next period, not in this period. Just make it very much clear. All the expenses are not the expenses which are to be deducted from the incomes. Only those expenses which from which we are getting the income, which are from which we are earning the income, will only be deducted from that particular income. So we will not take 2 lakhs as an expense, but we will take only 1,50,000 in order to calculate the profit of that concerned period, of that concerned year 2023. Is that okay? So this is the main concept of batching concept, which simply says the expenses incurred should relate to, and the incomes also should relate to, the same period. As we all know, revenue is recognized when the sale is complete. But did we sell the goods of 50,000? We didn't. So how can we, recognize it as an income? Obviously, since we just cannot recognize it as an income, we cannot record this as an expense also. So services rendered, even if cash is received or not. Similarly, expenses is recognized when the assets and services used to generate revenue have been done. Okay, now is this clear to you that we have earned a profit of how much? 30,000 and not a loss of 20,000. Now in the next year, what will happen? Let's check it out. Now what's happening is, suppose in the next year, in year 2024, I have a stock, a opening stock, which was left behind in the previous year, worth of rupees how much? 50,000. I have stock, I have goods with me worth of rupees 50,000, which were not sold in the previous year. I have that. And apart from that, I have purchased more of the stock, more of the goods in this year. For example, I have purchased the goods in this year for rupees 3 lakhs. So in total, I have goods worth of 3,50,000. Okay, I sold in this year full 3,50,000 worth of goods for rupees 5 lakhs. I repeat it once again. What I did in the previous year, I had goods worth of 2 lakhs. I purchased goods worth of 2 lakhs, of which I sold goods worth of 1,50,000 for 1,80,000. I incurred a profit of how much? 30,000. 50,000 was ignored. Why was it ignored? Because that is the amount of goods which I haven't sold till date. So this will not be counted as an expense for 2023, because that was the expense. I know the cash has been spent, the money was gone out, but then also it will not be treated as an expense, because this expense relates to the next year. Why? Because these goods will be sold in the next accounting year, so it will be treated as an expense for the next accounting year. I think this is very much clear to you. Now, in the year 2024, we have the leftover goods of the previous year, that is rupees 50,000. And we also have the goods which we have purchased in this particular year of rupees 3 lakhs. So in total, the goods we have are of rupees how much? 3,50,000. These are the goods which we are selling it for 5 lakhs. So what is the amount of profit we have made? Yes, we have made a profit of 1,50,000. These 3 lakhs are also the expenses for current year, and this 50,000 is also the expense for current year, because the revenue which I am generating after selling these goods relates to this particular year itself. So matching concept simply says that all the expenses and incomes which are relating to the same period should be recorded, and with that only the profits are ascertained. Either it may be result in profits, or it may also result in the losses. Losses are basically when my expenses are more as compared to my incomes. I hope these all examples are very much clear to you. So now we'll come back to the scenario, the reading part. Expenses incurred to earn the income should relate to the same period. As we all know, revenue is recognized when sale is complete. When is the revenue recognized? We have already studied that when the sale is complete, when the services are rendered, even if the cash is paid or not. Now, talking about the expenses, in the previous year, we did the expense of 2 lakhs. But in order to calculate the profit, we only subtracted 1,50,000. That's what has been written here. That is similarly, expenses are recognized when assets and services used to generate the revenue has been done. That is, even if the cash is paid or not paid. Is that okay? That simply means, the main thing is used to generate the revenue is the main key word. I repeat once again, used to generate the revenue or incurred to earn the income. Incurred to earn the income. Previous year, the amount we spent in order to sell the goods for 1,80,000 was only 1,50,000. It wasn't 2 lakhs. We didn't sell the goods worth of 2 lakhs. We had purchased the goods of 2 lakhs, but we didn't sell it. Okay, 50,000 was still remaining. So 1,50,000 is the actual amount of expense which we incurred to get the revenue, to get the income out of it. Is that clear? So the assets which are used or the services which have been used to generate the revenue, either the cash has been paid or not, will be recognized as an expense. Next, the salary, the interest, the commission are recognized on related period basis. Obviously, as we all know, that the rent or the salary which we pay are on a monthly basis. So it will be recorded on a monthly basis. Even if the cash is paid or not, then also we will record the same. Okay. Next, not when actual cash is paid, even though my employee has worked for me, but I haven't paid any cash to him, then also I will record it as an expense, but I will pay the cash afterwards. Next, depreciation of fixed assets is divided into the over the period of usage. Now let's take another example. What's happening? Suppose I have purchased a machinery. Okay, I have purchased a machinery for say 5 lakhs. Now, the capacity of my machinery, the capacity as in the full lifetime of that machinery is only capable of producing 50,000 units. After the production of 50,000 units have been complete, then that machinery will be of no value. We will simply discard, we will simply throw away that machinery, because the life or the capacity of that machinery is to only produce 50,000 units in its whole lifetime. Now, suppose in 2023 and in 2024, okay, what we did was we have produced 30,000 units worth of goods in 2023. So can you please tell me what is the amount of machinery we have consumed in order to produce that 30,000 units? Now, how we will calculate it? We have a machinery worth of rupees 5 lakhs with a capacity of 50,000 units. We all know that this machinery can produce 50,000 units and it is worth of 5 lakhs. If I divide 5 lakhs with 50,000, I will get 1, 2, 3, 4, 1, 2, 3, and 4, 1 and 10. That is, in order to produce one good, that is one product, I need to spend 10 rupees. The simple calculation. So, since in 2023, I have produced 30,000 units. So, what is the amount of machinery which I have consumed? I have consumed machinery worth of 3 lakhs. In this year, I will recognize the expense only of 3 lakhs, not the 5 lakhs. 5 lakhs is the actual amount which I have spent, which I have paid to get that machinery, but I am not fully utilizing that machinery in the current year. I will utilize that machinery in part. That is, a part of that machinery will be utilized in this year and the other part will be utilized in the next year. So simply 3 lakhs worth of machinery has been utilized in the current year and the remaining 2 lakhs will be consumed in the next accounting year. So the actual expense which will be deducted from my incomes is not 5 lakhs but only 3 lakhs. Okay, the actual amount of expense which is done to get the income. So since I have produced 30,000 units worth of goods, I will only be able to sell 30,000 units of goods only. Am I correct? So if I'm selling those 30,000 goods, the income which I'm getting from that only I will deduct 3 lakhs as an expense of machinery. So this was the basic concept of matching concept, which simply says the expenses and the revenue, the expenses and the income should relate to the same period of time in order to get the exact and accurate amount of profit. It also says the depreciation of fixed assets are divided over the period of usage. Now the depreciation, this 5 lakhs depreciation will be treated as an expense in 3 lakhs in the 2023 and 2 lakhs in 2024. Okay. Now next, again in the matching concept, the cost of goods are matched with the sales revenue. As we just saw the example, 1,50,000, 2 lakhs and 1,80,000. It's the same thing for profits or the losses. Not all the cost of goods are taken. Obviously, not all. We didn't take all the goods, that is all the expense of 2 lakhs. We only took how much? 1,50,000. But the cost incurred on goods sold. On the goods sold. This is the main point. Goods sold. The cost we have incurred on the goods sold. Goods have been sold of 1,50,000 for 1,80,000. We have not sold the goods worth of 2 lakhs for 1,80,000. Is that clear? We have only sold goods worth of 1,50,000. So this one is the correct answer. This is the wrong one. Okay, next. So cost of unsold goods. What was the cost of unsold goods? That was 50,000. Deducted from the cost. Obviously, from the 2 lakhs, we deducted how much? 50,000. Then only we got the actual profit of 30,000. Is that clear? So this was the main thing of the matching concept. Next, all the revenues earned, whether amount received or not, paid or unpaid, shall be considered to ascertain profits and losses. For example, what's happening in 2023, I had a employee to whom I used to pay salary. I used to pay salary 10,000 per month. But what happened? Obviously, a year has 12 months, but 2 months I didn't have the cash to pay to my employee. So I paid for only 10 months. That doesn't mean I will not pay for 2 months. I will pay him for 2 months as well, but next year. In 2024, I will pay him the full amount which has been remaining for the previous month. Now, in this current year, I have paid how much? 1 lakh to my employee. So this is not my actual expense. My expenses will be 10,000 multiplied by 12. That is 1,20,000 is basically my actual expense, which will be deducted from the incomes, because it has been written that the amount paid or unpaid, if I have paid the amount or if I have not paid the amount, then also that expense will be treated as expense. Is that clear? So shall be considered to ascertain profit and losses, even though 20,000 are still remaining to be paid, which will be paid in the next year. But the employee has worked for me for those 2 months as well, for which I am liable to pay him the amount in the next year. So that is the amount of expense which will be recorded in order to ascertain the profits. So I hope this full concept of the matching concept is very much clear to you. Thank you so much.